Want to know the top 3 reasons to invest in real estate? Then stick around. What's up everyone, I'm Mike and welcome to the channel where we'll be breaking down various real estate, finance, and economic concepts to help you reach your financial goals. We've all been there, hanging out with our friends talking about how much we hate having to wait an entire year for the final season of Game of Thrones.
But winter is coming.
And the conversation somehow turns to real estate. Oh yeah, my Uncle Joe, he invests in real estate. He makes a killing. He told me all about it. Let's face it, everyone either knows someone who owns real estate, invests in real estate, or works in real estate. But why is that? It's simple. Real estate has consistently been the biggest tool for the greatest number of people when it comes to growing their wealth. Not to mention passing along that wealth to future generations. So why do so many people love real estate? Well, the first reason is control. With real estate, you can control a real tangible asset. Unlike a stock in a company, which you have no control over, unless you're a billionaire activist investor that actually owns a large enough piece of the company to be able to force them to change their policies, real estate is something you actually do control. You can rent it out to a tenant who you've screened that will actually pay the rent. This I promise you. Or you can renovate it to increase the value. Now I know some of you are probably thinking about that investment advice that you got from an advisor that told you to put all your money in a diversified portfolio of mutual funds and that the stock market historically always goes up 7 to 10% over time. Part of that statement may be true, but aside from deciding when to sell the stock, you're really just along for the ride. That's a great option for some, but having some influence over your investment is a huge benefit for most investors. Not only that, but the investment advice that you got from that advisor may not even be in your best interest. Many of those advisors are earning commissions on selling you specific mutual funds or insurance packages. You can bet if they have a commission structure in place, they're going to be thinking about how to make the most commissions instead of which funds that you should be invested in. I'll go into this in more detail in a later video when we discuss the various fees that financial advisors charge. And the second big reason people love real estate is because you can use debt to help fund the purchase price. And this is commonly referred to in the investment world as leverage. Now, I'm not talking about credit card debt or the loan your friend took out to buy that flashy sports car you know they had no business purchasing. I'm talking about a loan to purchase real estate, which will provide rental income as well as the potential for appreciation. Debt and leverage is probably one of the most misunderstood tools in any wealth building strategy. And that's because people are confusing between debt that you use to buy things that you don't actually need, which ends up racking up interest charges that you can never pay off, versus debt that's used as leverage to purchase a more expensive asset than you could if you had to purchase it with all cash. Let's unpack that for a second. A majority of people that buy a rental property usually end up getting a loan from a bank and paying a down payment of anywhere between 20 and 30%. If they can rent it out for more than the cost of their monthly payment, plus whatever taxes, repairs, and insurance expenses are needed, they're essentially having their tenants pay off the loan while hopefully getting a little extra along the way. This extra is what's called cash flow, and it's a concept that every investor lives or dies by.
Show me the money.
You've probably all heard the phrase, cash is king. Well, that's because if you don't have enough cash to pay your loans, you either get foreclosed on and lose your property, or you have to go through bankruptcy to restructure a payment plan. However, by utilizing debt efficiently to grow your wealth and taking advantage of leverage, you can buy a more expensive property than you could if you had to put down 100% cash. And the third reason why people love real estate is called depreciation. I'm sure everyone remembers the first time they started working and got that first paycheck and found out that about a third of your money went to
All right, let's take a look at our where'd your money go categories.
To federal taxes, state taxes, Social Security, as well as a few others. For me, that moment happened when I was 16 and it stuck with me forever. I remember getting super excited to get my first paycheck and I had already picked out the new speakers I was going to get for my car with the money I thought I was going to be getting. Then I looked at the paycheck and I realized it was way less than I expected. The harsh reality is that employees can pay up to 40% in taxes, and it only gets worse. If you're self-employed, you have to cover your own self-employment taxes, and you could pay up to 60% of the money you make in taxes. Well, what if there is a way for you to make money and not pay any taxes on it? completely legally. Now that could probably be the subject line of a great scam email, and it probably has, but in this case it's actually true. You can do that by utilizing a tax break called depreciation. We've all heard of depreciation, but let's set the record straight on what that actually means. We know that when we buy something like, say, a computer, it's going to last you a certain amount of time before it eventually comes to a screeching halt and crashes every time you try to open it. Well, the government seemed to agree that computers don't last forever either. So they decided that if you purchase one for your business, it's good for 5 years. What that means is for the $500 computer, you get to take a deduction against your income. Now, how that gets calculated can vary depending on the current tax laws, and these things are constantly changing, so be sure to check with your accountant. But back to our example. Since you purchased a computer for $500 and the law says that it's good for 5 years, you can take a deduction against your income to offset that income in each of those 5 years. So why the hell does this accounting concept exist today? It tries to spread out the cost of that computer over the time that you actually use it. You may have to pay for it all at once, but in reality, you're getting value from it over the entire 5 years. Now, a building, whether it's a house, an apartment building, an office building, a shopping center, those don't last forever either. For tax purposes, the government has decided to group all buildings into 2 categories: residential and non-residential. Residential property gets depreciated over 27.5 years and non-residential over 39 years. So let's see what that means for a $300,000 house that you purchase as a rental property. Since the rental property consists of both the land and the building, and only the building is what actually gets depreciated, you have to figure out what the value of the land is versus the building. In this example, we're just going to say that the land is $25,000 and the building is $275,000. Well, because it's a residential building, it gets depreciated over 27.5 years, and you get to take a depreciation deduction of $10,000 every year. The whole reason you buy a rental property is so that it can produce rental income. So let's say you rented out that property for a year, and after paying all your expenses, you had $8,000 of income for the year. Because you had $8,000 of income from the property and you were given this gift of depreciation of $10,000, that means you'll actually show a $2,000 loss despite getting $8,000 in your pocket. It's that simple. You made $8,000, but because of depreciation, you show on your taxes that you actually lost $2,000 and therefore pay no taxes. Not only do you pay no taxes this year on that rental income, but you get to use that loss to offset other rental income you may have, and if you don't have any, you can carry it forward and use it in future years. Now, we just did this example for a $300,000 rental property. Imagine what would happen if you had a $30 million apartment building and instead of $8,000 in income, you made hundreds of thousands or even millions, yet still showed a loss due to depreciation and paid no taxes on it. That's why we said earlier that people in real estate love debt and leverage, because they can actually get a bank to give them a huge loan for that $30 million apartment building. They can make money from the rental income and then use the depreciation to show on their taxes that they made no money. In a future video, we'll be discussing how various groups of people join together in what's called a syndication to do just that, which I'll be sure to link in the description below, so stay tuned for that. Now, before you say that this is unpatriotic to take advantage of this depreciation deduction to avoid paying taxes, you have to understand exactly why the government gives tax breaks in the first place. It's no secret that people are economically motivated, and aside from paying people directly, one of the most powerful tools that the government has to incentivize a certain set of behaviors that it wants those people to take in the private sector is to actually give them tax breaks. In the US, we currently have a shortage of housing, and according to a joint study from the National Multifamily Housing Council, as well as the National Apartment Association, by the year 2030, the US will need an additional 4.6 million new apartments. Now, the government isn't going to make those apartments, nor would you want it to, but by giving these tax breaks for depreciation, along with other tax credits, it incentivizes those investors to either build new rental properties or fix up old buildings to rent those out, which in turn lifts the supply of housing, which we so desperately need. So by properly incentivizing a group of people to take a certain set of actions, society benefits through an increased supply of quality housing. To quickly recap, you've got control, debt or leverage, and depreciation. These are 3 powerful reasons to love real estate, and we've only scratched the surface. And now I want to hear from you. Let me know in the comments below what are some of your favorite benefits of real estate. And if you like this video, make sure to hit the subscribe button and give it a thumbs up. In terms of what you can expect from the channel, I'm going to be breaking down many different real estate, finance, and economic concepts in future videos. And if you have anything specific you'd like to see, let me know in the comments. Look forward to seeing you next time. Thanks.